Hello guys, welcome to PSP Source. So in this video we'll learn how to calculate goodwill using super profit method step by step. So before start to work out our problem, we have to know what is goodwill. Goodwill calculation is very much important. Why? Because it shows the reputations and trust of business has developed, and also it helps to attract customers and earn more profits. Suppose if you're having a strong goodwill means it seems like our business has valuable and reliable ones, right? The problems are Mr. Vishwanath has invested rupees 4 lakh in a business. His net profit before tax at 50% is rupees 1 lakh 60,000, out of which rupees 12,000 annual rent of own building used as premises, business premises, and rupees 24,000 per annum as his salary were not deducted. For starting his business, he left a job fetching him a monthly salary of rupees 2,000. Before starting his business, he had invested this amount on 10% securities. Fair compensation for the risk involved is 2%. Calculate the value of goodwill on the basis of 3 years purchase of average annual super profit, which means Mr. Vishwanath has invested rupees 4 lakh in his business, and his net profit before tax is 1 lakh 60,000, which includes a rental cost of rupees 12,000 and salary of rupees 24,000 that were not deducted it. And then he left a job fetching him a salary of rupees 2,000. Here that salary of rupees 2,000 considered as notional salary. Notional salary means assumed salary, which is given to business owners' contributions, like his time and effort treated as value, and for that he set a salary for he could earn if he worked elsewhere. It is not actual payment actually, but we should consider it to calculate true profit. Next, before starting his business, he had invested this amount on 10% securities, which means before he decided to start a business, he invested his money of rupees 4 lakh in securities, and that will give return at rupees 10%, which means 40,000 return back every year. Next, fair compensation for the risk involved is 2%. It involves extra 2% risk Mr. Vishwanathan will bear. Here, 10% return considers safe return, but that additional 2% represent uncertainty return. We cannot predict. 2% return is more risky than a normal return of 10%. The formula to calculate super profit is goodwill equal to super profit into number of years of purchase. Super profit equal to average profit minus normal profit. Normal profit equal to capital employed into normal rate of return. Now let's see its explanations. Super profit refers extra profit over normal profit. Normal profit represents expected profit based upon normal rate of return. Capital employed means total investment. In this sum, total investment is rupees 4 lakh. Okay. Next, NRR. NRR means normal rate of return. It is a standard return. It is a standard return that an investor expected to earn for an investment. Here additional risk given, which means we need to calculate super profit. Okay. Now solution is, for calculating goodwill we need to know actual profit. Here profit before tax given rupees 1 lakh 60,000. Deduct such salary of rupees 24,000 from that net profit. So I will get 1 lakh 36,000, and furtherly you have to deduct tax of 50% of 1 lakh 36,000. We are getting rupees 68,000 adjusted annual profit. So now we have adjusted profit. We have to prepare normal profit to calculate bill calculation. Normal profit equal to capital employed into normal rate of return. Capital employed means total investment. Here capital employed 4 lakh given and normal rate of return 12% given. If you calculate 12% of 4 lakh, you will be getting 48,000 of normal profit. For getting super profit, we have to subtract the normal profit from adjusted profit. That is 68,000 minus 48,000 will have 28,000 of super profit, which means here 3 years of purchase given. So we can conclude that super profit will expect to earn for 3 years. Okay. Finally, for calculating goodwill, we have to multiply super profit of rupees 20,000 and 3 for numbers of years of purchase. will have rupees 60,000 of goodwill.